People nowadays are investing in ETFs. Can you suggest some funds? So, what kind of theme you are targeting? Any good theme? Do you know ETF first of all? Yeah, some rough idea that it's stock plus mutual fund. Okay, so before investing, let's first understand what is ETF. But before everything else, I would like to thank Mr. Amit Pednikar for liking and commenting on many videos. He has been following my videos since long and I really appreciate it. Thanks Anaga's Kitchen Magic for liking and appreciating my video at YouTube page. Hope you like other videos too. Thanks Pushkar Tripathi for asking question on best insurance companies at my Facebook page. Really appreciate it. If you too want to get your name featured, then answer 2 simple questions that I will ask at the end of this video. And people answering both the questions correctly will be featured in my next video. So let's get back to hearing the story of ETF. One day this fund house decided to create ETF.
मुझे ज्यादा भेजामारी नहीं करनी है, ये इंडेक्स अच्छा रिटर्न दे रहा है, इसको कॉपी कर लेते हैं। तो इंडेक्स में जो स्टॉक है ने वो कहीं से लेने पड़ेंगे।
So he calls his friend, authorized partner, to give him some stocks.
तेरे पास HDFC बैंक और TCS के 10,000 शेयर हैं।
हाँ भाई, बट तेरे को शेयर दे के मुझे क्या मिलेगा?
तुझे 50,000 यूनिट्स मिलेगा
और मुझे मेरा शेयर वापस चाहिए तो?
तू ये 50,000 यूनिट्स वापस मुझे दे दे और शेयर रख ले।
ओ गजब, चल ये रख शेयर्स और मुझे यूनिट्स दे दे।
His friend takes this unit and sell those units to retail investors.
एक का दो, एक का दो, एक का दो, एक का दो, एक का दो।
भैया 1 रुपए की यूनिट दे दो। So this way ETF units of this mutual fund trade on stock exchange. Retail investor can buy or sell these units like a normal stock on any trading portal app. But ETF खरीदने से फायदा क्या है? इससे अच्छा डायरेक्टली म्यूचुअल फंड में नहीं इन्वेस्ट कर दें। ETF is quite cheap as compared to mutual fund. So let's say you are managing one XYZ mutual fund. One day you got request from say 5,000 retail investors to redeem mutual fund units. Each of them want to sell back 10 units to you. So you would need to buy all those 50,000 units from each of those 5,000 retail investors. Then you need to pay each of them in 5,000 different accounts. You need to maintain units and account balance of each of those 5,000 retail investors. Hence, you will have higher cost to maintain this fund. But if you are managing ETF, then you just need to deal with few big parties who deal in bulk. So you may get requests to redeem 50,000 ETF units from just one authorized partner. Shares and units are just maintained with few authorized partners, so automatically cost of managing the fund reduces. And if expense to manage fund reduces, then investor as well as retail investor get to keep more profits. Second advantage is why ETF you get lots of investment opportunity. So you can invest in Europe market, China market, government bond, commodities, properties and even invest to fight climate change. Third advantage is that by investing in different asset class and markets, your portfolio gets diversified along with earning good returns from across the world. Okay, right now I'm getting really impatient to find top ETF funds. To find top performing ETFs, I downloaded 2 reports, one from MFI website and other one is ETF market data from NSE website. So I use 3 criteria to find top performing ETFs. Number 1, liquidity. Number 2, tracking difference. And number 3, tracking error. Let's start with our first criteria, which is liquidity. So since you are buying units from stock market, the unit should be available at the price at which you want to buy. Say you want to buy 10 units of ABC ETF which has NAV price of Rs 201. There was another sell order of 30 units at 203. But you think why to buy at high price, right? So you placed order to buy 10 units at 200 rupees and waited, but order did not execute. Then you thought to increase your buy price at 201.5. Then waited, but only 5 got executed, rest did not. So this is called liquidity risk. Because of this risk, you may not get your desired buy or sell price. And solution to this problem is selecting ETF that has high trading volume and low bid-ask spread, meaning there should not be very big gap between buy and sell price when you see these prices at your trading portal. Let's look at bid-ask spread difference in Nippon India ETF Nifty Bs and LIC ETF Nifty 50. You can see difference in bid-ask of Nippon is minus 0.04. But for LIC, bid-ask difference is minus 0.87. So prefer ETF with low bid-ask rate difference because that means it has high trading volume. Now let's understand tracking difference. To understand tracking difference, let's say there is one teacher who writes this sentence on board. I want to eat cake, and ask her 2 students to copy that sentence and write in their notebook. So child 1 writes, I want to eat cake, C-A-K. Child 2 writes, I want to eat curd. Now child 1 has copied most of the words except one last letter. But child 2 did not copy entire word properly. So who is good in copying? Child 1 or child 2? Child 1, as he just missed to write one letter. Correct. So this way we use tracking difference to see how closely this ETF scheme is copying its benchmark, index or another fund. The lesser the difference is year on year basis, the better it is in tracking the returns. Now let's understand tracking error. So this number is the variation of difference between scheme returns and benchmark returns throughout all the years. Let's understand this with example. So let's say there are 2 ETFs that copy or track same index. First year benchmark gave rupees 10. Scheme 1 by copying this got rupees 9.5 and scheme 2 got rupees 9.5. Second year benchmark gave rupees 10, but scheme 1 got rupees 9 and scheme 2 got rupees 9.4. Third year benchmark gave rupees 10, but scheme 1 got rupees 8.8 and scheme 2 got rupees 9.5. Fourth year again benchmark gave rupees 10, but scheme 1 got rupees 9.1 and scheme 2 got 9.6. So which one you would select? Obviously scheme 2, as the difference does not vary too much every year. Copy to karna hai. Yes, so this is how I identified top performing ETFs that have less tracking error. And here comes the quiz time. So question number 1 is, can you invest in China market via ETF? Option A, yes. Option B, no. And question number 2 is, which ETF has more liquidity? Option A, Nippon India ETF Nifty Bs. Option B, LIC ETF Nifty 50. So answer both these questions correctly and get featured in my next video. So which are the top ETFs that meet all these criteria? Well, you have to wait for my next video and check out part 2 of this video.